Hey there, welcome to the pod. Mitch Goldberg here from Client First Strategy, wealth management firm. Couple of things going on today. Markets continue their rebound from the pounding they took the last couple of weeks. Pretty solid day in the market. A lot of big name tech stocks had big days. A lot of the mid tier and third tier tech stocks had big days, but it was pretty broad based, the rally. And the last couple of days we spoke about, what if things, what if things are okay? What if things materialize and they're okay? So what happened today? There's two things that happened today. I know you're thinking the first obvious one is that the Federal Reserve wrapped up their 2-day meeting, delivered as expected, possibly two more rate cuts this year, expecting a little more inflation, a little bit of weakness, and they're just thread trying to thread a needle there, and it's an unusual place for the Fed to be, but they really can't do much about it. We spoke yesterday that the street is kind of the stock market's in holding pattern until we decide what wins, the inflationary effect from tariffs or the recessionary effect from tariffs, which is going to have a bigger impact. Right now, the Fed says they're about, as far as they're concerned, right now they're looking at an equally balanced view. But the other thing that moved the market up is the silence. Did you notice that? The silence is deafening. President Trump hasn't said anything about tariffs for a couple of days, and that has allowed the stock market to go up. So the less President Trump talks and the more his minions do the negotiating in the background, the more comfortable investors feel about buying stocks. Let's roll a quick intro. I'll talk a little bit more about this. I have to go soon, so we'll be off pretty quickly. All right. Thank you so much for joining me. If you don't mind, give us a like, thumbs up, heart, whatever it is. It helps your contacts see the good work we're doing here. If you like unbiased news reporting, financial media, if you want an unbiased place to get investor education, financial literacy, this is the place. This is not a sales channel. We are putting out really good educational content. We want to be viewed as the expert. So when you do have a need to speak with a financial advisor, you will reach out to us. But that does not mean it's a sales pitch. We are not doing that. We are not giving you a biased view. We're not giving you a politically jaded view. We're just giving it to you straight. We're calling balls and strikes to the market, telling you what to watch out for, what's ridiculous, what's right, what's good, what's bad. And I'm giving you insights based on 35 years of being a financial advisor. I've helped many clients overcome financial challenges, and I've seen clients overcome financial challenges. And I take all that education and I spill it all here for you, and I let you know what's going on and how you can overcome challenges. So let's just take a quick look at tech stocks overall. Look at this. Shopify up $7.50, up at 8%. Twilio up. All right. Broadcom of AVGO is a symbol. Broadcom it was a merger between Broadcom and Avago, and now it's just Broadcom, but they didn't change the symbol. Snap up a little, but look at the percentage gains. These are all nice moves in tech stocks. All right. So even NVIDIA, the high was 153. So it's like a $15 stock going to $11.70. It's a big drop, no doubt. But the amount of time that NVIDIA was actually over 150 really could be measured in maybe a day or two. It was just a quick spike and a spike down. If I told you, 2 years ago that NVIDIA could be at where close to the 117, you would be thrilled if that would come true. So here we are at 117. Now, I understand there's a lot of Johnny-come-lately investors, people who all of a sudden decided, I want to buy NVIDIA, artificial intelligence this, artificial intelligence that, their chips do this, their chips do that. And they got caught up in the enthusiasm after the election, enthusiasm for deregulation, which which is something that the stock market would like. Now, whether if you like that or not, that's up to you. But for the market, that's viewed as a positive. Strong economy, continuing to spend money that the government doesn't have. Believe it or not, that has been good for the stock market. More government spending means stronger economic activity. Less government spending, less economic activity. So we have a real rally in our hands. And although stocks haven't fully made up half the losses that they had in the last couple of weeks, they're getting pretty close. They're getting pretty close. And a lot of the stocks I follow very closely are doing well. There's big news even on Boeing. It's not just technology stocks, but technology stocks are the biggest part of the stock market. So we have a tendency to focus on those because they have the biggest impact up or down on the overall averages every day. All right. So what happened? The Federal Reserve wrapped up a 2-day meeting there in which they determined interest rate policy regarding raising or lowering the federal funds rate. So they left the Fed funds rate steady. They left it alone. Unchanged is the word I'm looking for. This was widely expected. But people are looking for commentary from the chairman of the Federal Reserve, Jerome Powell, to reinforce that there could be 2 rate cuts later this year. He said he sees inflation going up a little bit, economy slowing down a little bit. Usually you get inflation with a stronger economy, lower inflation or deflation with a weaker economy. But we're both. And the reason for inflation is because of tariffs, which raises prices. Now, prices going up from tariffs is not like a natural supply and demand force. It's arbitrary, it's capricious, it's man-made. I think I'm using all the right words, right? But nonetheless, higher prices is the Fed doesn't say higher prices from natural economic forces of supply and demand are different than prices going up because of tariffs. So, but they see the economy slowing down because of inflation, because if you have to buy less stuff because your money's not going as far, it means companies produce less goods. Consumers and businesses alike buy less goods, they pay for less services, and that has a slowing effect on the economy, negative impact on employment, things like that. So that's what I said to you yesterday. The market's in a holding pattern, and I don't think we really have a big move in either direction until we decide what happens with the economy, tariffs versus inflation. So the Fed is waiting. They could change their mind if the economy slows down considerably in the next couple of weeks. We could see the Fed teeing up a rate cut maybe by June. If not, then the second half of this year we'll get our 2 rate cuts. The situation is fluid and it can change. I mean, things, as you can see, things change very quickly. But the other reason the markets are going up, you haven't heard President Trump beat up foreign allies, trading partners. He hasn't talked about tariffs. And when he doesn't talk about tariffs and just off the cuff ramblings of tariffs based on whatever mood he's in or based however angry his reaction is to another country, the market has a tendency now to go up. And maybe this is all a negotiating ploy, or maybe Trump just learned his lesson and realized he can't have a really bad economy and a really bad stock market and expect to hold on to the House and the Senate, which with an election coming up in less than 2 years. So maybe he's gotten that message and he's decided that the negotiating should be in the background for tariff policy. April 2nd is a big day because we're on extension for reciprocal tariffs until April 2nd, according to President Trump. And as we get to that date, we'll see what news comes out. They might extend it. They might just say we've come to an agreement with some of our trading partners, and then he could turn back to his, what he campaigned on, which is a pro-growth policy of lower taxes and deregulation. So we'll see if he gets back to that. And that's what investors want. They didn't think they were getting involved in a tariff war and a trade war. So those are the things that move the market today. That's what's been moving the market the last couple of days, with President Trump basically sidelining himself and just deciding to go after a federal judge instead of our foreign allies. So we'll see what happens the next couple of days. I expect this week to be pretty quiet. What are the next things to look at? First Friday in April, we have the March employment report. That'll reflect the layoffs in the government and different agency layoffs, things like that. We'll also start getting in April. We'll start getting quarterly earnings from corporate America. That'll tell us a lot, and we'll start getting commentary from CEOs and CFOs on if they're about whether or not they're going to change their investment plans for plants and equipment and investing in new software, things like that, because maybe they slowed down because of the tariffs, or maybe we're worried that they did, but they really didn't. So we have a lot to discover coming up. The situation is fluid, and I will keep you posted every step of the way. So please stay tuned. Again, give us a thumbs up if you like the kind of work we do here with this live stream, and I'll talk to you tomorrow. Thank you.